morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. And it is December 18th. This will be the last full trading week this month, as next week will be the holiday weekend, starting with Christmas and Christmas Eve. So we'll have basically 3.5 days next week. And then, of course, we got pretty much the same for the next following week with New Year's. So we do have one economic report to go over today, and that is the leading economic indicators index uh, for the month of November. So October initially had a 0.7% increase for it. However, it got revised here, as we can see here, at 0.8%. Sorry about that. Point for forecast for November is 0.5% increase, and it exceeded that 0.6%. So this is looking pretty decent here. This is a good number. It kind of gives us like a more forwarding view of what outlook of where the economy is moving towards. So it does show some pickup there. Let's take a look here at the headline news, see what's going on over there. Stocks are down. We're still kind of working on a stimulus. Congress is working on a stimulus package, trying to put something together. But on the other hand, they're also trying to come up with a government funding bill. We have a deadline tonight, actually, for the government funding bill. If not in place, this could be another government shutdown. So this is something that's important as well. They need to try to get something in place to try to get this so the government can continue in operation. Also, of course, we need to get the stimulus package put together as well. Now, another thing that could create some huge volatility in the markets will create some volume is we have what they call a quadruple witching. And what that is stock index futures. We got the stock index options, and stock futures. Basically, they're all expiring today, which will create a lot more volume in the market where the traders are going to have to do something with their positions and reposition or so. So you're going to see a lot more volatility due to the higher volume out there. So let's go ahead and take a look, see how this is affecting the bond market. We're up higher in the day, as you can see here. We had much better pricing, but however, it did kind of pull back a little bit. We're down currently 2 basis points from where we left off yesterday. The good news was yesterday we did break above the 25-day moving average, which helped put us in better position. And so we were seeing earlier today better pricing, but however, now we're seeing probably about the same as where we left off yesterday, pricing-wise. We end up closing up about 8 basis points yesterday, which is, again, good news. I think when we started this, we were about even or no change yesterday when we did this. So, but we have potentially kind of get some improvement here, but it all basically is stemming from the stimulus talks. As once you get that stimulus, once there's something with the stimulus approved, this is just creating a lot more debt for government, which will create more supply than demand. And this is why we're having this adverse effect on mortgage rates. So again, it will depend on what we see in terms of any stimulus package going forward. Same thing with yields. We're kind of seeing that rise a bit. Went up a point, just under 0.93, just under 0.94. We'll just round up at 0.936. Still kind of this range we've been seeing before between the two technical levels and also the 25-day moving average with its as a floor of support. So that's pretty much, rates are unchanged. The good news is that we did break above the 25-day in the mortgage-backed securities. That gives us a floor again, which could help boost a little bit. But again, we got a couple of different factors. Of course, we got the stimulus package, but another factor that could come into play is the Brexit as well. There's something else that's been something that they're looking at as well on the back burner. All right, so that's pretty much the wrap for the day. If you guys are in the process of looking to refinance or purchase, please reach out. A little background on myself, I am a loan officer. I do work with a national lender. We can certainly help you pretty much in any location you are located. We can help you with your refinances, helping you get better rates, to changing the terms from a 30 to a 15-year, or if you want to change it in a different capacity, we could do that as well. If you're looking to take money out of the property, that's another avenue we can go. We can also help you with your pre-approvals, so that way you can buy your next property and then finance that as well. Please feel free to reach out. The best way to reach out currently would be just send me a message through the direct message through the site you've seen, find this video at. All right, you guys have a great rest of your day. Thanks so much for watching, and we'll see you on Monday's video. Enjoy your weekend. Bye-bye.